Hi traders and welcome to the Technical Analysis Market Watch on Friday the 14th of March. So I've seen a bit of a market meltdown in indices this week, and the currencies have stayed relatively stable considering how much volatility we've seen in other markets. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So I'll start out here with the Aussie USD, and we can see that, yeah, pretty much for the whole week, we've seen very stable moves. The range has been relatively tight, with lows around that sort of 62.60 area and highs around that sort of 63.20, which has been a pretty tight range considering what we've seen over the last few weeks in terms of movement. So it has consolidated right in the middle of this mini channel that has formed between the 62-cent mark and the 64-cent mark. And really, with the moving averages flattening, as we can see right through here, the direction which basically either direction is going to be tradable, because realistically we are in the middle of a channel. We're going to have a look at the dollar index later, which might give us a bit of a clue as to what the Aussie USD might do. But realistically, you would only be trading this little mini channel inside a channel. Really, the range, all you do is just line up the lows and the highs of this week, and the first break in direction of either side is the one you'd trade, and that would be only to the boundary of the bigger channel. So if we see a daily close above 63.40, we would look at trading up to that 64 as a scalp. And if we see a daily close below 62.60, we'd be looking for short opportunities down to the 62-cent mark. So all we're looking for is a series of higher highs and higher lows in the direction of either of those boundaries, and that would give you a reasonable trade on the Aussie USD. It's only scalping mode for now until we get a daily close, a proper daily close above the 64-cent mark. We're not going to go any longer than that, and we know that the 62-cent mark is very, very heavily defended with a lot of support here. So really, the best way to play is if you absolutely want to really tightly scalp, draw the boundaries of this week, as you can see, and trade and scalp to those boundaries. But if we see a little break on either side of those, trade to the bigger boundaries on the Aussie, and that would be the easiest way to play this one while the market remains relatively volatile. We'll go over to the US dollar CAD now, and similar in a sense that it hasn't really done a lot range-wise, given what it's done in the past, but it has had a couple of cracks at going up higher. We can see here on Tuesday, we can see a candle that tried to break past the 145, obviously couldn't, but we know that we've got very strong resistance here at 144.50. It's been very heavy resistance for quite some time now. You can see right through these, this period here, for the best part of the year, we haven't been able to get past this, and late last year. So no real surprise that it's failed on its two attempts to break through, but it is holding up above the 20 moving average at the moment. So yeah, the channel that is formed here, and it's a reasonable channel. I mean, it doesn't look very big, but you've still got a reasonable amount of movement there. It's about 150 pips. It's sitting right in the middle of that channel where the 20 moving average is at the base. So realistically, if you want to scalp the short-term moves on this one, you'd be looking from the top of this consolidation zone, the top of this channel, down to the middle, which is where the 20 moving average is, around that sort of 143.70 area. A break of that zone and a break of the 20 moving average, and then I'd be looking at the lower part of that boundary. Very similar to the Aussie in a sense, though what we're looking for here is just support and resistance at these channels until we get a proper breakthrough. And when I say proper breakthrough, I'm talking about a close above that 145.20 area. Now, if we get a daily close above there, we'd look at taking a longer trade into the US dollar CAD. But while it's actually staying consolidated in this zone, given what the US markets have done this week, these currencies have been very, very stable actually. So realistically, I'd be only trading inside these channels until we actually see a break. I wouldn't be preempting a break of them. Just look for the boundaries of those channels and scalp inside them. Just use the lower high, lower low sequences again on a smaller time frame to actually execute those trades. All right, we'll move over to the US dollar yen now. And this has been perfectly behaved again from a technical standpoint. It's been really, really good all the way down. Just like it was on the way up, it's behaving itself perfectly on the way down. And you can see this week was no exception. It came down and touched our level at around that 146.60 area. It went slightly lower, but not much. But yeah, realistically, this is where our target was. Hit the that level, two rejections off it, then went straight back up to the 149 level. So it doesn't look very big, but these ranges are quite big. Like you're talking about, 250 points there of movement, which is pretty good considering what the other currency pairs have done. But it failed to actually go up and close above that level. We know there's pretty strong support there, and will be now resistance because there was support here. So it's a role reversal zone. Still looking like it wants to weaken. It hasn't shown any signs of recovery yet. All this move is basically just a rebound back to effectively the 20 moving average and a role reversal resistance. So no real surprises there, but it has found, what we're looking for now is a break of this level, obviously, right? If we get a 146.50 or under close on a daily chart, or if we get that on a weekly, even better, then we're going to start looking to the next zone on this. I think it's come down in an extraordinarily orderly fashion, very, very tradable. I know a lot of people have got all of these trades because basically it's doing everything it does, or it needs to do from a technical standpoint to take advantage of the long opportunities and the short counter, the counter trend longs and the long-term short has played perfectly well, and every time it's done exactly where it's moved exactly to where it needed to go. If it, again, one of those moves where we need a daily close below the 146, really 146.20 would be the ideal. And then we're going to start aiming relatively low, right? And we're starting to talk about a 144 level at that point. If it does indeed reverse from here and close above the 20 moving average, and that's going to require a 149.50 even as it stands right now, then we can start to look at moves back up to the 151. But there's got a lot of work to do before that, and I certainly wouldn't want to preempt that. It would be something that needs to actually play out in price, and if it does that, then we can actually join in and look for that action. But for now, I'd be trading inside these two zones again. Like I say, very, very stable given what the US market's done, which we'll look at shortly. But 146 and 149 are your boundaries, and just look for trades in the direction of either of those, wherever the momentum is shifting for the session that you're trading. All right, over to the dollar index. It's tried to recover this week. Look, initially it tried to sell off past that 103.80 area. We know 103.80 to 104.20 is a very, very heavily defended zone. It has been for a long time. If you go back, you can see how far the support and resistance has played out. So no real surprise that it's trying to rally above it again. It's got a little bit of work to do to get above that 104.20 again, but it's trying to show signs and it is trying to turn around. It has been a very, very heavy sell-off. The euro obviously is the one we'll be looking at in a moment, which is the beneficiary of this because it has strengthened quite significantly with this big move over the last few weeks. But this is trying very, very hard to get back above this support. And if it does, I think it's a reasonable chance to get back up to around that sort of 105 area and catch up to the 20 moving average if it can do so fast enough. The 20 moving average is moving down at a relatively good pace, but it's been a very good moving average, as you can see, all the way up for the dollar index, and there's no real surprise to see it do the same. The Eurozone we obviously want to be looking at with more detail because it's the one that's given us the big move. 109 target was hit this week, as you can see. Really, really good move. Obviously resistance there, so we knew that. Hopefully a lot of people got hold of this because this was on a tear. We had very, very strong moves on the euro, and you really should have been able to get hold of one of those moves. If you go even back to a 1 hour chart, you can see that all the way up, it was doing the higher, high, higher, low sequences that we talked about all week, really. So it was giving you opportunities to get in. And if you're scalping it, even on the 15-minute chart, you got to go back quite a bit to see it. But you can see here, all of these pullbacks to the 20 moving average were trading opportunities to get in on this long trade. So really, it was a really, really good opportunity. Hopefully you were able to take advantage of that because I know a lot of people did. But target's been hit though. 109 was the target for it. Wherever it goes all the way back to the 107 area is the next real strong support. If the dollar index gets back to 105, I'd expect we're going to be probably back around here, around that 107 on the euro. But a bit of a pullback right now wouldn't be a bad thing anyway. You want to see this pullback a little bit, and because it has been a very, very big move, and we want to see markets that we can trade. So with a pullback to around that sort of 107.50 would be okay. There is support at that level you can see through here, and then maybe a rebound to retest the 109. But if it passes the 107.50, I'd be starting to target this lower level at 107 as a target on the euro. All right, and the S&P 500, this is the one that's really been heavily sold. You can see we've seen a massive drop. There's been no pullback really of any note at all, for several weeks now. And really, it's starting to hit critical zones where if we get a break below the 5,500, I really think that, 53.80 to 53.50 is going to be the next target for this. It's fighting for dear life to get back above the 55.50, which we know is reasonable support as well. It's had a real crack this morning in this session to get below 55, and you can see it only just failed from getting lower, but it has pulled back significantly, half its range today in the session. So we'll see where the session ends. There's still a little bit of time to go. We've got a couple of hours left of this session to play out, and where it closes is going to be probably the catalyst of what we're going to be looking at next week. I think if we start Monday next week and we're below 5,500, I'm going to be starting to target the 53.80 to 53.50 as the target zones for the short. But if we close the week and we start trading above 5,600 on Monday, I would be starting to look for a recovery back up to 57.50. So those two zones are going to be the important zones. So 53, I'll pop a line at 53.54. So our 53.80 is actually the place I really want to be. I'm going to pop a line there. That is an area that I am very interested in. That will be what I think will happen if we see a daily close or a weekly close below 5,500. I think we've got that 100 and a little bit pips to actually get to the real support. And then if we, again, like I said, if we close up above 5,600, then I'd be looking at targeting the 57.50 as the next target for the long. So pretty good trading on the US 500, but very, very heavy selling. So we're expecting a reversal at any time, just as a bit of a pullback. But again, you got to keep your trades relatively short and keep them, keep your stop losses very sensible in very volatile markets, because we're seeing a lot of volatility and there's still quite a bit to play out by the looks. So I hope you've had a great week's trading. We've seen some really, really good trades and a lot of our levels have been hit. So hopefully you're able to take advantage of some of those. Have a great weekend. I look forward to seeing you all next week.